Hi, I'm Jaime Agostino, Vice President of Sales, Marketing, and Education with Vizo Financial, and this is your FOMC update for March 2026 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 3.5 to 3.75%, and they also maintained the rate on the reserve balances at a level of 3.65%. The decision was widely expected by the markets. Fed Governor Stephen Miron was the only dissent, favoring a 25 basis point reduction at this meeting. It is notable that Fed Governor Christopher Waller, who dissented in January favoring a 25 basis point cut rather than holding rates steady, was on board to leave rates unchanged at this meeting. The post-meeting statement changed very little, but acknowledged the relatively stable unemployment rate and the uncertainty the current situation in the Middle East poses for the U.S. economy. We received an updated set of the Fed's summary of economic projections this month, given it is the meeting at the end of the quarter. Projections for 2026 show GDP raising a tenth from December projection to 2.4%, and the unemployment rate remaining steady at 4.4%. The estimates for inflation rose more aggressively, with the headline PCE moving up 0.3 to 2.7%, and core PCE moving up 0.2 to 2.7%. The median estimate for the Fed funds range remained stable at 3.4%. The dot plot for the remainder of 2026 gave more color there, showing 7 of 19 estimated expected rates to remain steady, 7 of 19 expected rates to drop 25 basis points, and 5 showing additional cuts beyond that. It is interesting to note that though the Fed funds median estimate did not change, the dots have certainly coalesced around the range of 0 to 1 rate cut, whereas the dots in December were more dispersed. This seems to indicate the vast majority of the committee is relatively comfortable with the level of the Fed funds range, which could make it more difficult for a new Fed chair to gain traction for cutting rates more aggressively this year, if that were the plan. We'll see what additional information Chair Powell gave us at the press conference after the break.
Risk doesn't happen overnight, but the warning signs are already there. We can help your credit union see the signs sooner. Meet Default Sleuth through Vizo Financial, an AI-driven solution designed to detect default risk before it becomes a problem. Default Sleuth analyzes real member behavior to identify risk early, helping collections and leadership teams act faster and smarter. The solution delivers behavioral-first risk detection, intelligent work queues, full lifecycle case management, and executive portfolio visibility. The best part? Default Sleuth supports a member-centric approach because managing risk shouldn't come at the cost of relationships. Join a new era in collection intelligence with Default Sleuth through Vizo Financial. Contact a corporate account manager today at accountmanagers@vfccu.org.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. Overall, economic activity is expanding at a solid pace with generally stable unemployment over the past year and inflation remaining somewhat elevated related to the committee's 2% goal. He indicated events in the Middle East have added uncertainty to the economic outlook, given it is too soon to know their scope and duration. The committee will continue to monitor the risk to both sides of their mandate and are in good position to respond with appropriate monetary policy adjustments based on the incoming data, the evolving outlook, and the balance of risks. In the question and answer session, Chair Powell answered a number of questions about the Middle East and the effects of oil price shocks on the economy. Overall, he maintained that it is just too early to know what those effects will be, which he said also means one should take this month's summary of economic projections with an even bigger grain of salt than normal. He categorized the current level of the Fed funds range as on the line between mildly restrictive to neutral, and said that it is a good place to be to continue to work on lowering inflation while not hurting the labor market. He said inflation should come down farther over the summer months as tariff effects continue to move through the economy. However, only time will tell the overall severity and duration of the Middle East events and how they play in the overall picture. Maybe the most interesting information to come from the press conference was Chair Powell's response to a question about his future at the Fed. He said he will serve as chair pro tem until the new chair is confirmed, as is customary and in conformance with the law. He also said he has no intention of leaving the Fed board until the Justice Department's investigation into him is over. Further, he indicated that he has not made a decision as to whether he will stay on after that. Well, pretty much as expected on the economic front, but maybe a little more interesting concerning the Fed-Trump administration chessboard. Seems both sides have drawn their lines in the sand. The Trump administration side has chosen a new Fed chair nominee, albeit one that is likely to be held up in the Senate until the administration's own investigation into Chair Powell is over. On the Fed side, Chair Powell has said he will stay on at least until a new chair is confirmed and the Justice Department's investigation is over. We'll see who makes the next move. That's the FOMC update for March. Thanks for watching and be well.